What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. SoFi earnings are completed, and guys, it was stellar across the board. I'm gonna go with a A minus. I mean, they absolutely killed it. We're gonna be going into the earnings, summary, their presentation, reviewing, each page on how they did. We're gonna go deep dive, guys. We're gonna look at the stock-based compensation, see if those numbers are accelerating higher. We're gonna look at net income loss, user growth, technology, Galileo growth. We're gonna look at everything. So be sure to smash the like button. The SoFi management is doing exactly what they need to do, and we are just a few quarters away from being profitable, guys. We got to get those student loans back. I just posted a video. The full earnings call live is up. If anybody didn't have the chance to watch it, if they were at work, so be sure to watch that video. If you have not watched the earnings call, I have watched the whole earnings call before doing this video, so I am updated on where SoFi is, for the future. So be sure to subscribe to the channel if you are not already subscribed, and be sure to drop a comment. I'm going to be commenting back to as many people as I can. Let's get into it. All right, guys, I'm filming this video at around 6 o'clock right now. The market didn't do very good today. You can see red S&P, Dow 1.2, NASDAQ flat, Russell red. SoFi had a very flat day, while some other growth stocks were doing pretty solid. We're up about 8% in the after hours, so that is not very good for what SoFi accomplished, guys. I'm telling you, these earnings were stellar across the board. The short interest was still extremely high going into the close. We know that a lot of these, big legacy banks have short interest on this stock. Short interest is around 17 to 18%. Market cap probably is around 6 billion by the end of this after hours. So guys, I mean, SoFi really did kill it. It's just we are getting, not very good price action on our earnings right now. Now we're going to look at the Q2 summary results, guys. You can get this on, SoFi's, homepage. If we just scroll down, let's start off with members, guys. We could see that members, second highest quarter for new member growth, 450,000 quarter over quarter. Now SoFi is up to 4.3 million members. So guys, this was the second best quarter all time. The best quarter ever was Q4 NFL season at 523,000 we could see right here. So this was a stellar quarter, guys. Absolutely amazing. Second best member growth all time. I mean, if we keep this up 2 more quarters, let's say 400K a piece, guys. I mean, SoFi is going to be, at, 5.1, 5.2 million members by the end of the year. If we go over to products, second highest quarter for new products, 702,000 quarter over quarter, up to 6.9 million. So they are adding a ton of products right now. Another second best. That Q4 was insane, 900,000. So we're up again. Galileo counts was a little bit slower than usual. We're at 117 million accounts. We could see from our normal, either 9 or 10 million, we pull back a little bit, but I heard these were some high quality Galileo accounts, B2B businesses. They added about 7 million, so a little bit slower growth, slowing down, but maybe they can make up for it. So Galileo was, on the subpar of the past couple of quarters, a little bit of a decline. Lending and financial services, lending right where they want to be at, steady growth, 22%. Financial services, 100% year-over-year growth. They really got to monetize this area of the platform, guys. If you are not aware, this is SoFi's segment that they're losing the most amount of money. I mean, lending's profitable. Technology with Galileo is profitable. The financial services, ton of expenses acquiring these customers, guys. They need to keep monetizing this segment, but that's pretty solid growth at 100%. Let's look at the quarterly performance. Adjusted net revenue, 356 million, up 50% year over year. I was calling for about, 370 million. I believe the adjusted was 363. So I was 7 million off on the adjusted. EBITDA, guys, look at the EBITDA. It is very, very solid. 20 million. Doubled their past 4 quarters of EBITDA. That's that bank charter starting to warm up. And if you guys see what they have for the next 2 quarters of EBITDA, it's going to be much, much higher. There's a possibility we're going to get, maybe 30 to 40 million dollars in EBITDA next quarter. So you're going to keep seeing that profitability start to kick in each quarter, guys. The bank charter is starting to kick in. The Q3 should be very stellar across the board. Q2 2022 non-GAAP results versus guidance. You can see the guidance on adjusted net revenue came in 16 million higher than the high end. And then you also have adjusted EBITDA coming in 5 million higher than the high end. So they're looking extremely solid, guys. The EBITDA margins at 6%. This is with student loans nowhere to be found. So, guys, imagine when student loans come back. The EBITDA is going to be insane. I'm telling you, SoFi is going to turn a profit extremely quick when those student loans come back. So it looks like they didn't do their Q3 guidance yet. They just went ahead and did Q3 and Q4. This is the second half, so they just put in the 2 quarters combined. I think they might announce it sooner, I was hearing, or something like that. But you can see they're expecting 830 to 835 million of adjusted net revenue. That's 50% year-over-year growth. Adjusted EBITDA, this is what I like, guys. They're expecting a 75 to 80 million. So we could have a big quarter heading our way for EBITDA, either Q3 or Q4. I mean, you're talking either a 30 and a 50 or a 35 and a 45 million EBITDA. So the EBITDA margin is about to start accelerating even better. Full year non-GAAP guidance, it looks like they increased their guidance very, very slightly. 1.508 to 1.513. Prior was up to 1.510 billion. Adjusted EBITDA went from 105 to the top end of 109. So they're seeing a little bit smaller EBITDA profits. And as you guys can see, the EBITDA 2019 negative 148, 2020 negative 45, 2021 30, and then they're just skyrocketing EBITDA now that they got this bank charter. Imagine if the student loans were back. I think their EBITDA was at like 200 million plus. Before the student loans got extended for, the 2.5 years. So they lost a lot of profitability on those student loans. And I don't care if people say this was a student loan company, they deserve to get student loans back. Now, if we look at the balance sheet, guys, we could see the cash and cash equivalents have dropped. It was about $1.3 billion. So $600 million went towards the bank. So that's why you're seeing the cash and cash equivalents drop. We can see that the total assets are around 12.6 billion. Total liabilities did increase because deposits are a liability. As you can see, their deposits went all the way up to $2.7 billion. So this is absolutely insane. They just said they were at $1.2 billion in deposits, and as soon as they got the bank charter, they were able to grow straight to $2.7 billion. So guys, if they're growing at 100 million deposits per week, we're going to be looking at like 4 million deposits by the end of Q3. We can see book value right now. It looks like it dropped a little bit because of the crazy deposit increase. So they were at about like 5.3 to 5.5 billion, I believe. So now they're down to 5.1 billion in equity value. So just staying right around the same, equity value, but just skyrocketing on deposits, guys. And total debt, I believe, was a much higher at one point as well. I think it was like 4 to 5 billion for total debt. So it looks like they got the total debt down too, which is very interesting. So now I want to go over to the, consolidated statements and cash flows, guys. You can see right here, this is the share-based compensation expense. They didn't put Q2 separate, but all you got to do is just take the Q1. It totaled $157 million. So all you got to do is go back over to the Q1, take the 77 million, and then minus it from that 157 million, and I believe it comes to 80 million. So think about it, guys. Q1 was 77 million stock-based compensation. Q2, 80 million. So you're seeing it pretty tight range, which I like. And we're going to go over to see their net income loss, which you can see net income loss for Q1 was $110 million. But as you guys can see on my Twitter, I have everything posted, so be sure to follow my Twitter. Net income losses have dropped to $95 million. So you're seeing a lot of these technology stocks right now, losses starting to explode. I'm telling you, I tried to tell you this bank charter, even with skyrocketing revenue, I told you guys I wanted to see revenue skyrocket and losses come down, and that's exactly what happened. Stock-based compensation stayed extremely tight. And if you guys want to see the breakdown, lending brought in $257 million. Expenses were about $108 million, and you can see they had $141 million profit. So huge profits coming over in lending, and you could see they had personal loans absolutely skyrocketing year over year, 91%. It's just they're getting absolutely hammered with those student loans, down 54%. And also home loans, we know the macro environment. I'm not really worried about the home loans because it's like a smaller segment. It's just student loans is absolutely plummeting right now. They need to get those student loans back because they're operating 25 to 50% less from where they were at 2 years ago, and that's an extremely profitable business. The technology platform, this is Galileo and also Technisys. You can see revenue is exploding with Technisys, 85% year over year growth to $83 million. Directly attributed expenses, $62 million. We know that they are investing very aggressively in Technisys. Also, Galileo, B2B, Latin America. They're still a profitable business, guys. $21 million profit. So lending is very profitable. Galileo technology is very profitable. We want to see those accounts skyrocket a little bit faster. They only added about 7 million. Now off to financial services. We could see here it said the contribution loss was 53.7 million, 29 million higher than the prior year, largely due to credit card business and building the current expected credit loss, the CECL. So you can see some of the losses had to do with credit cards. And we can see net revenue was about $30 million. This is a 78% increase. Directly attributed expenses, this is your bonuses. This is where people, get a $300 bonus on a loan and stuff like that. Also referring people, $25 bonuses. You got directly attributed expenses, $84 million. That's going to give you a contribution loss of $53 million. So this is where the big losses are coming in for SoFi. They need to monetize this business even faster, and they are trying to do that as best as possible. So this is where the heavy losses are coming in. So we have three businesses. Lending's profitable, technology's profitable, financial services are losing a bit of money. I like the stock-based compensation is in a very tight range as well. They're not exploding that, getting very, very, greedy. It's $3 million or higher, so that's a bonus as well. Net income losses are coming down. All right, guys, I really hope you enjoyed this video. That was the breakdown. As you can see, SoFi is killing it across the board. Like I said in my last video where I watched the full earnings call towards the end of the video, guys, what is really killing SoFi is student loans right now. That is a extremely profitable business. If they can get that business back, you're going to see EBITDA skyrocket, net income losses skyrocket down, revenue skyrocket. That's part of their business. That's where this company was at 10 years ago. They deserve to get it back. I paid off my student loans when I went to college back in the day. So I believe everyone that took out a loan should pay it. If you wanted to go to an Ivy League school paying $500,000, million, that's your choice. You could have gone to a lower community to start with the bottom years and just gone over to a, mid-major university. Some people choose to go to these extremely, extremely pricey colleges to get the best degrees. If you enjoyed this video, be sure to subscribe to the channel and be sure to smash the like button. Don't forget to drop a comment. My name is Kyle. I hope you have a great day.